Good morning, Squadron. Welcome to the morning brief on Wednesday, June 17th. Looking to be futures in the green a little bit today, so we'll see if it's another run like yesterday to keep a four-day winning streak alive there for the Dow. But what we're going to talk about this morning for our topics of the day, as you can see, we're going to talk about the travel industry investing, which I don't recommend, but there are some opportunities to invest, and they certainly did bounce. If you would see a second wave, that would be another way. If they all sell off and then come back, you might be able to hop in and out of these names. But I don't really consider any of them long-term holds, but they are kind of major players out there, so we do want to talk about them. And for our academic topic of the day, we're going to talk about RevPAR. So that's what I've got for you. For the flow, we'll go long, short, open, short, long. We'll do a market review, headline review. There's the 6 names we'll take a look at. All of them are individual names except for JETS, which is an ETF. We're going to talk about some day trading opportunities today, and then we'll execute the open and get over to Q&A. And if you have contingencies, again, there's the email for anybody at steve@ototnow.com, and there's our standard disclaimer. So there's some exciting news with the podcast itself, which again is the parent of this this morning brief. So let's go over to OTOT Now, and I'll show you what I'm talking about. And as you talk to folks about this, if you tell your friends or whatever, about, hey, I'm in on this thing where we go over the market in the morning. It's kind of cool. Check it out, that sort of thing. You can send them to the website. The website's kind of where you see that there's a podcast, and then you can see more information. So there's the podcast up front. There's episode 1. That's I think I'll leave that one there for a while. I may switch to another one, but I can put any episode I want. But what we're going to do next is click here to listen to all episodes. I'll show you that here's where we stand right now. So I got 3 episodes loaded last night. So you see they're most recent first with the different headline or the different explanations of what that particular podcast is about. So what you can expect is about one of these a day to emerge. And then the official launch for the podcast, I'll have a launch party, which will be Facebook Live, YouTube Live, all of that jazz. I'll have a host with me. We'll be on July 1st. I'm targeting the evening of July 1st sometime. So that'll be pretty cool. In addition to just me talking in these podcasts, I'm also going to do a financial thought leader series where I'm going to talk to people in the financial industry. I have a good friend, that is a banker up in South Dakota that I went to college with. So he'll be my first interview to kind of get the inside, how do banks work? How do they really manage their cash on hand? Just some of the fun kind of gee whiz, questions, and then some hard hitting questions too. Like, is the traditional bank eventually going to die? Right now, even small town America has like 5 banks. It seems. It's kind of crazy with all the online banking opportunities. So that's what you can expect out of that thought leader series. I have somebody lined up for a nonprofit to talk about some of the finances behind nonprofits and how those work. I have a state lawyer that's going to come on. I have a mortgage person to hopefully give me the straight skinny on some mortgage stuff. So anyhow, I think that's what will kind of build the podcast. Is I'll have my educational stuff that I'm putting on, but I will also have interviews to kind of keep it a little more interesting, storytelling, that sort of thing, because I know people like that. So that's where we are with that. Let's switch over to the On Time on Target YouTube page. This is where you're headed to if you happen to check out the replays that I send out to you guys. So this is where you'll land. And if you see, there's several things in here. And Predator, based on your feedback, what you had mentioned that I should have some form of index, if you will, about topics that I've talked about. So what you can see there is on the main briefs, I had my tech go through yesterday and basically pull out the main topics that I've talk about every day. Like today, it'll be travel industry investing and RevPAR. So that way, if somebody is looking for a specific topic, or if any of you happen to go back in time, or if you're a new name in the room, you can go in here and kind of see these are the topics that we've talked about. I also think this will help kind of advertise the morning brief of, they can see the things that we're talking about is kind of all over the board. So it's all, I try to bring a kind of an all encompassing view of investing across the board. And then of course, that first one down at the bottom right is the sample brief. that was back when I had the room open. I think I had 18 people in there that day, so there was some more chat. So it's kind of live. So that's really, if you were to focus somebody on one, that's where I try to send them, and that's of course has the most views out of everybody. So we can bring that down, and let's go up to the TD Ameritrade. We'll do our market and review. Okay, there's where we've been for the year. You know about the run up, the drop off, and then the recovery back from there. We talked about the holding the 300 level on the big up day, and from that was what, Monday. The we did hold the 300 level basically at the end of the day. So that was great news. And whenever you hold a level like that, that kind of sets that as the new floor of resistance, if you will. So you can expect the market to move higher from there. Obviously, that's technical. That has nothing to do with headlines. But from a technical perspective, the chart's pretty healthy for the overall market. So, and you would see that the trend lines have kind of auto-populated there, which is kind of nice to help you realize that, okay, that's actually now officially a trend since it held that bottom level. So a lot of people use those things. They're not perfect by any means, but they are certainly something to take a look at. So, okay, let's look at the past few days. And there you go out to the back it out a little bit. You see the big move up there. It's almost a straight line up until pre-market yesterday. And then yesterday when things opened, we were in the green, kind of dropped down, and then we still finished in the green, but we certainly had kind of came in a little bit. From there, the futures pretty much been green. So we're about, just barely holding on to the green here going into the open. So with that kind of pattern, we might actually open red, and that's not uncommon after the big move up that we've had. So that's kind of what I expect, is we'll probably open barely in the green and turn red today, just as more of a profit taking, just kind of a, let's get our some consolidation before we move higher. Okay, let's go over to the calendar. Some earnings that we had out this morning. Oracle, I was here last night or this morning. They beat earnings, but they missed revenue pretty bad, and Oracle's been kind of left out of the big tech resurgence anyway. So I have them on my list for short today. They're down a couple of percent. I expect that to increase from there. And Starwood, STWD, is the only other big name that I saw out there. They actually beat earnings. And again, that's a kind of a Starwood Hotels, a travel industry, so it fits with our theme today. And that would be a long, so kind of a surprising numbers on their end. Okay, let's go to the CNBC.com. We'll go around the world real quick. I'll refresh here and check out our pre-market. So barely holding on to the green there for the pre-market. We'll click over to Europe. Europe's doing well. Everything's in the green there. Let's see, over in Asia, Japan market was down. Yeah, those are basically flat across the board. US yesterday, you can see the numbers, how we closed there, basically 2% across the board. So when you have big move up like that, we shall see if it holds today. Look at the VIX. We talked about it was over 40. It was up, I think, 43, if you will, on Monday. And I asked the question, will it hold 40? Not only no, but heck no. So you can see how much the VIX moves. So if you do get involved with trading the VIX, you need to, you're juggling chainsaws there a little bit. So just make sure you know what you're doing. And we talked about that yesterday. Okay, let's go over to bonds. 10 years off a little bit, but not really anything significant. Let's go to oil. Oil kind of been good news with oil, getting up close to 40. And the dropping off a little bit there today. Nat gas is something that I follow. I don't talk about it a whole lot in the room, but I do follow oil. And if you want to invest in oil, you can go Dig or Doug. Those are triple levered ETFs that aren't really right most of the time for investing. But when you look at nat gas sitting at $1.62, it's uncommon for it to be below $2, let alone all the way down to 162. Yesterday was, I believe, a 22-year low. So there's a couple ways to invest in that. You can do UGAZ, which is Uniform Gulf Alpha Zulu, which is basically a triple levered ETF, thinking that the price of natural gas is going to go up. Or you can go DGAZ, which is the same one with D in front of it. That's if you think it's going to go down. So I picked up some UGAZ yesterday. You might have seen that pop up in some accounts. Not a whole lot, not making a big investment in it, but I do think that it's going to go up from here. I don't think it's going to get back to $2. Again, natural gas does a little bit better in the winter when there's heavy demand, but it's at such a low right now that I was comfortable picking some up there. Okay, let's go over to precious metals. You can see those are basically flat across the board. Okay, back to our headline review. Okay, there you can see our 4-day win streak is, once you have those moves, those are, those don't go on forever. So we could take a breather today. The Fed, basically, when you hear the terms, don't fight the Fed, that is pretty good advice, right? Because the Fed's out buying individual bonds now, 180 million a day. I finally found the number that's up to 180 million. The only thing potentially negative out of the Fed's, and Chairman Powell talked to Congress yesterday, he's scheduled to talk again today. The only thing he said, which is an adult thing to say, is they'll end up buying bonds up to the point where it makes sense not to do so. Like, hey, that sounds like an adult in the room. And that's that Powell day 2 ahead under the next thing there. Well, yeah, that would make sense. But then, of course, that's like taking the punch bowl away. If you've heard that, taking the punch bowl away from the party, eventually we will have to stop buying everything under the sun up and propping up the market. And eventually rates will have to rise again. I think we are years away from that, but we shall see. Okay, scroll down a little bit. You can see the home buyer mortgage demand is up. There was a new housing start number that came out earlier that was actually a little bit low. New housing starts is the permits for house building. But the fact that the overall housing market is pretty healthy right now is another great sign. You do see there's been a lot of talk on CNBC this morning about CEO responsibility and corporate leadership. So you do see some CEOs stepping up and supporting the things that are affecting this country at this time. Again, generally it's monetarily, but of course, we'll see where everything goes. Hopefully that helps at least to resolve some of the social unrest that's going on. Okay, continue on down there. Robinhood, yeah, let's go back up a little bit for that Robinhood drive stock trading renaissance. Well, it's kind of interesting because a lot of folks are following what people on Robinhood are buying, and they're buying these travel names that we're going to talk about today. So they're really kind of hopping in big time on thinking that they're going to make a killing, which they have. So, for the folks out there with their apps and they're buying a few shares and stuff, they are kind of moving. People are paying attention to what they're buying. We'll see how it all works out. Okay, England's not in negative rate territory yet. That's good news. Let's continue down. Aunt Jemima, it is kind of hard to believe that name is still around. I remember that from my childhood and kind of thinking, that's interesting that character is still here. But soon to be gone. I think that's probably the right move. Okay, Moderna was one of the leaders in the vaccine. So again, getting some good news out of them. You can't really trust the CEO because, of course, they're going to talk positively about their company, but it's better than them saying nothing. And the last one I'll talk about is the $15 an hour for Target. I did read that article this morning. So that was a pledge they had made years ago, actually, to move up from where they were at the time. Their first step was 11, then to 13. When COVID-19 kicked off, they actually went to from 11 to 13. So they started paying everybody a couple dollars more an hour. Now they're going to 15 as a minimum wage, but they had set that to occur by the end of 2020. So kind of progressive on their part. From an investment standpoint, boy, that brings your baseline labor costs that much higher. So wow, right? I don't know. That I do have some Target. I'll have to take a look at that. I don't necessarily. I mean, it's a good news story, obviously, for labor, but it's not necessarily a good news story when you're, stock owner. But Walmart, I believe, is up to $13 an hour, and I did look up the nationwide minimum wage is still down at $7.25. I think if there's a blue wave and if there's a Democratic across the board election in November, then that would probably jump to maybe even 10. But it'd certainly move up. I don't know how high. But okay, we can bring that down. Let's go ahead and go over to Schwab. We'll talk about our long-term investing theme for today, and that's the travel industry. Okay, which are just a quick review so you know what's up there, and then I'll talk about them individually. You have Love, which is Southwest. We're going to talk about airlines first. Jets is the ETF that's associated with that. So not only are airlines a what I would call a bad long-term investment, you can own all of the bad long-term investments in one holding if you want. Again, not a recommend. NCLH is Norwegian. We talked about Norwegian a bit, and then you have Carnival off to the right. Bottom left is hotels. We haven't really talked about hotels, but of course they're affected in this as well with people traveling less, but people are driving more because they're flying less. So maybe they need more hotels. So we shall see. But Hilton is, I wouldn't necessarily call them best of breed, but there's a story I want to talk about. I would say Marriott, MAR, is best of breed. I still would not invest in hotels. And then the last one, bottom right, is TripAdvisor. That's just one of many of the names like Travelocity, Expedia, that are the, I call them ticket scalpers. That's probably not appropriate and offensive to their brand, but basically those that collect a little fee for matchmaking, if you will, from travelers to ticket sellers there. Okay, let's look at Love. Love is actually what I would call the best of breed as far as not only leadership of the company, but employee happiness, all of that, everything that goes into airlines. They were the one, Southwest successfully navigated the 2007-2009 timeframe very well. They also navigated 9/11 pretty well because they had the longest fuel futures. They have fuel futures contracts out for well over a decade. So anytime there's a change in oil, they aren't affected nearly as much. So, but as the industry as a whole, obviously got hit pretty hard all the way down to looks like almost 20 there, if not 20. And then, of course, that big move up, which has got all the Robinhood folks thinking that they're geniuses, which you're right. Hey, they made some money. Good on them. Don't begrudge them that. Almost, basically doubled off the low. And now it's kind of fading back in. So if you were in one of those names, I would say now's time to let go of those names. And for all of these, I wouldn't hold them now, but if we do get the W recovery, so if we actually go back and revisit the March lows based off of the second wave or social unrest or drama associated with the election, that would be time to consider picking up some of these names. But I'm talking like Love down below 25 before I would even take a look at it, and then I wouldn't necessarily buy. I just look at it. So Jets, I kind of wanted to show you the fall off in the ETF, which can be kind of interesting there. That really fell off a cliff compared to the rest of the airlines. You can see it kind of one for one with Love there, but yeah, people got out of the ETF very quickly, which means it's a sell off across the board. So you can see that sometimes you can have a good name, and when the ETF sells off, it can get drugged down with it. So that's why I put that up there. And it also pays a dividend once a year, so that's why you see that just 1D associated with that. So the interesting thing there is most holdings pay quarterly. Disney is one that pays twice a year, and some only pay one a year. So if you're in the dividend game to like live off of the income, you would not want to hold something that just pays out once a year. You'd rather have the income flow spread out a little bit. Okay, let's look at middle left there. That's Norwegian. I looked up some numbers because I was kind of interested. So there's kind of your three big names. There's Norwegian, there's Royal Caribbean, and Carnival. And out of that, if I had to pick a best of breed, it'd be Norwegian. They're actually the smallest of the big three. They only have 25 ships. And I think actually being small helps in the hospitality business because I think you can focus your effort a little more. Royal is the middle of the pack at 50 ships, and then Carnival has 103 ships. So they would be the biggest. And they're off to the right there. So I don't see a whole lot of difference in the charts between the two. So kind of negligible, if you will. I do think Norwegian, if they all went back down to below $10 there, I think Norwegian would be more attractive, if you will. Okay, HLT is Hilton. That's the bottom left. An interesting story with Hilton is they filed for bankruptcy several years ago. And, I talk about private equity on occasion. And when I do, the first name out of my mouth is Blackstone. I'm invested with Blackstone. I'm a shareholder of Blackstone. I'm a little bit of a fanboy of their CEO, Steve Schwarzman. who started with $400,000 in 1986. So I thought that's kind of a cool story, and has grown into a multi-billion industry. Well, Blackstone, what they do is when somebody files for bankruptcy, like, you know, we talked about Hertz is, and Chesapeake brought it up earlier this week. Well, they took Hilton private. They basically bought up all the stock, and, you know, I'm sure it's pennies on the dollar, and revamped everything, and then re-IPO'd it several years later. And they also did that with SeaWorld as well, when SeaWorld was facing a bunch of troubles. So, so anyhow, that's the story of Hilton. So I kind of wanted to tell you that again. I would consider them second to Marriott as far as best of breed. So if I had to put money behind a hotel, I would fight to not do so. But if I did, it'd be Marriott. Okay, the story off to the right there is TripAdvisor. So there you go. There's no significant changes there to the two charts. TripAdvisor's off to the right. Again, I consider them in the same space as Expedia and Travelocity. Airbnb, I looked up to, I was like, hey, what's the ticker on Airbnb? And it's not, it's private. And they've been talking about IPOing for years. They were supposed to IPO this year, and I'm talking about Airbnb now. Yeah, and they're just, I think even though IPOs would take off, we'll talk about the one yesterday here in a minute, but I even think you couldn't touch Airbnb IPO here. There's just no way. I think these folks got hit harder than anybody because they're only making a few bucks off every ticket. So they really needed the volume that you're just not seeing. So, and if you tried, I had a trip planned that I had to cancel, and to try to get a hold of somebody at Travelocity is like, you know, that's golden tickets kind of stuff. You just couldn't. So, okay, let's go over to the short side. I minimize my chat here. I see some chatter. Oh, it was Buffett. So Warren Buffett said that exact phrase. If you want to lose, if you want to become a millionaire in investing in airlines, start with $1 billion, and you'll be the millionaire soon enough. So yeah, you have it almost exactly right there. Yeah, I have that written down too. NCLH short. Actually, I don't, because they moved down further than the rest. So I think CCL and RCL would be a better short, but we'll take a look at these right now. Okay, the first one I want is ORCL. Just going to type it in there. Okay, again, Oracle missed they beat their earnings, but they missed revenue. So a little bit of an interesting situation there. So they are gapping down somewhat from 55 down to 50, below 53. So we shall see how they end up opening there. Next one is DraftKings, DKNG. Again, looking at DraftKings short, just because they just got so greedy. This is almost ridiculous. They closed at 40, above 40. They're gapping down to 38. So you see kind of the big move on the left-hand side. Last night, they had a secondary stock offering, 33 million shares. So again, devaluing our shares, so I don't really care for that. And since we've had almost a triple since the DEAC days and the reverse IPO maneuver that they pulled, it kind of lets me think these are some greedy dudes in charge, and I'm not real thrilled with that. So I'm going to relook the thesis on DraftKings today, but I certainly didn't like this move. So we'll see how that hits the stock. We have seen this before, and it hasn't hit the stock. And what Hertz issued more shares and actually helped the stock. What? That was crazy. Okay, next one is AZO. Let's take a look at AutoZone. They missed earnings pretty hard and were falling off a cliff earlier. So they were at, well, looks like they bounced back significantly. They closed at 1139, and yeah, I guess that's probably when I looked right at the charts when I saw that, because it looked like they were 20% off. So you can forget that name. And STWD was a long, we'll put up there, Starwood Hotels. Again, they beat earnings, so they closed at 1529. They're up in the 16s now. I wouldn't really take these guys long, but we'll keep an eye on it. I wouldn't trade it, but it's something if you were looking for a long today, or if the market started screaming higher, that's one of the few names that I actually had written down early. Okay, let's look at the screeners. Look at the top 10 in volume. Not familiar with Urban One. Not even going to mess with that since this is gapped up so much. There's Carnival with that kind of heart of the window at that 5 to 10% gap. So we already, no, we didn't talk about those guys, did we? Let's click the chart there for a Carnival. So closed at 20, down in the 19s. I think they've got room. You can see they're up at 22. I think they've got room to come in as people. I think this is profit taking. So I think that will be my short. That's what I'm circling on my paper for right now. We'll come back to that in a minute. All right, let's look at the next tab. One share volume on those top ones, so you can just immediately throw those numbers out. And then nothing else meets our criteria of that 5 to 10% at least. So let's look at the decliners. There's Royal Caribbean again. Boeing, it's only down 1%. Not too worried about that. And the other rest of the stuff doesn't have enough volume. Let's look at the next tab. Not a whole lot of volume on that whole page, is there? So a lot of things moving up nicely, but low volume. Let's click on the NASDAQ tab. There's some crazy volume on those two companies. We aren't going to look at them though. Greenlight Capital. That's David Einhorn's hedge fund. That's been crushed for a couple of years now. Wouldn't touch it, even if it is gapping up. Okay, don't really say anything. I like that there. Let's go ahead and set up our big board, if you will. And I'm going to type my trade in. All right, let's go CCL in the middle, if you will. Need to figure out where to put my stop. I'm going to be CCL short. All right. Boy, I don't like where I have to put my stop there. I guess I can get away with a 20-cent stop up at 1940 or so. The stop's going to have to be 1940. So I'm going to give it, in case that drops right away, I'm going to give it a 25-cent stop. So when you look at that chart, I'm trying to get just above the most recent congestion. So on NCLH, I would want to be above, just above 19 would probably be my stop. So I think you're safe from where it's trading there. I actually kind of like your trade better now that I look at it. So if I was looking at real money, I think I'd switch over to NCLH, but I'm going to take this one. So CCL short, we're going to go 25 cents. I want to go in at 1 minute and out at 5. I don't want to hang. I'm going to give it more. I'm going to give it 10. Just because I think the market's actually going to turn red here at the open. Just because it's kind of fading in. Let's put a SPY off to the right. You can kind of see we can watch the market, since I think there's, I don't see burners in here yet, so I don't think he'll have time to get his trade in. So there's my trade. CCL short, 25 cent stop, 1 minute, out of 10. So again, with a bigger stop, I will need a larger move out of mine if both of our trades hold. So we'll see how things work out there. And I've got some other names for us to watch. So 2 minutes to the open here. I'm gonna move some stuff around on my screens and get ready. Let's go ahead and focus in on NCLH and CCL. You can leave SPY zoomed out. You can get the drawing tool out ready. Okay, I'm off on another screen, just checking the overall market, not just the S&P, but yep. Dow and the NASDAQ are both holding in the green there, just barely. Okay, I'll be in my trade first at the 1 minute point, and then Predator will be in at 2 minutes. For both of these, for real money shorts, I like the way they're setting up. I just like the fact that CCL is gapped down less, so I think it's got more room to run to the downside. In a perfect world, we'd see both of these back up at the open, so that's good to pop in the green there, at least for NCLH. Interesting move down in the SPY. That will help if that continues. So the fact that that's backing up in NCLH, that's just sheer profit taking, short covering. That's actually a perfect setup for real money. Same thing going on in CCL. Okay, let's zoom in on CCL. We're closing in on my open. I'll have the next bar. So I like that action, especially out of Norwegian there. Both of them are looking good. Gives us a much better entry point. Okay, there was my entry. So looks like I'm going to get knocked out there. So 1948 will be my entry. 1948, 25. So that's 1973 I would need to hold. So basically top of the chart there. So that is my entry into the trade. So I would need that to chill out pretty quick. So I'm much happier with the action there in my trade. Coming up on minute 2, this will be Predator's entry. All right, so it looks like what I catch 1954 was the entry there. 20-cent stop. So his upper is one arm loss would be 1974. It would need to hold. And then 3R would be down at 1854. That's very achievable. Excuse me, 1894. Misspoke there. So at the bottom of the chart, you can draw that in for him. For real money entry, I wouldn't be watching CCL yet. That looks like it needs another minute or two to figure out where it's going to go. But I do like this drop down. I would probably pick it up real money if it drops below 1930, to kind of make sure that it's on its way down. So I would not be in NCLH real money yet, or CCL real money. Okay, I'm knocked out of CCL. I'd be watching it for the real money entry. You can see the SPY doesn't, it's basically just flopping around. Not much of a note there. So yeah, I would take NCLH real money if it drops below 1930. So I would take it right there, real money on a trade 1930 with I'd have to give it a 35-cent stop all the way up to 75. So yeah, that's where I'd enter it with real money. So basically the same range there. And again, looking at CCL, if you were going to take, if it drops back below 1950, you could take it here. Again, stop all the way up at 73, so 25-cent stop. And I think both these are just going to strike down now. That's kind of a good pattern to see for real money. All right, so finally got the move we wanted out of those. That's nice. Let's take a look over on the right screen. Let's put in Oracle ORCL. Again, this was going to be a short off of the earnings. That backed up pretty significantly. It's still down a couple percent on the day. So entering that here would be a lot gutsier than, selling off, entering a cruise line trade there. So there's that stripe out of both the cruise lines. That's beautiful. So real money, that would have made us some money there. All right. And let's on the right screen, let's pull up DraftKings, DKNG. Well, not doing too bad. So it's up again, it's been hanging out around 40. So people could be excited. There's a theme out there that says that once live sports return, people are going to obviously sit at home and gamble on them less, which I would buy that. So the DraftKings, it's been great. It's been a double or triple depending on where you entered it. But is it going to be a good long-term investment? I'll probably keep, 50 to 100 shares sort of thing, but I'm not sure I'll keep it forever, sort of thing. So, all right, we're back over to my trade's busted. Norwegian looks like it's going to hold. Predator will get wherever this bar closes. So right now it's sitting a little over 1 R or almost at 1 R. So looks like that's going to turn out to be a nice trade, especially if you get some volume down here or get a move down. Okay, that's where it closed, 1926. So 28 cents into a 20-cent stop. So that's 1.4 R for the Predator. Nice trade. You win, sir. Another free month in the room. Real money, again, I would hold these to 3 R. So I would need basically where the Predator had his down here at 18. Once it gets below around 1890 or so is where I would exit a real money trade. And then same thing on CCL, we would need it to go below 19 to get a 3R trade. I think that's very doable on both of those, especially if the market goes red today. So I'd be very pleased in a real money trade, real money delayed entry. Okay, Apple hits record high. I just saw that bebop up. Let's pull up Apple on the right side. It's a fave. So no matter how your trades are going, you don't have to worry about Apple. Well, that's kind of funny. Is that really Apple in its record high? So it must have been the open at 355 was the record high there. So there's some profit taking going on in Apple. So that's kind of funny. All right, checking out the overall markets. Everything's just still barely in the green. NASDAQ's up almost 0.5%. So that might have been Apple and the big move up there. We shall see. Leave Apple off the right there and go out to let's go to a 15-minute chart. I just want to show something. Okay, when you look at covered calls, and I love covering up Apple, I basically keep it covered most of the time, and then I'll just roll the calls out and up, if you will. I think I have some calls up at 360. So if you had a call at 350 and it holds 350 today, then I would say, okay, yeah, we probably have to go up to 360. Remember, on an option, they do have the option to come in and take your shares, but options traders are in it for the money. They're not in it for your shares. So you don't have to freak out if in your account you see that you're in the money, if you will, from an options term. You just simply roll out of the money over time, and you've probably seen that or actually done that yourself. Okay, let's check the chat here real quick. I've had it minimized, so if there's any chatter, I haven't seen it. There is not. Okay, so let's look at the green side, all the way on the left. Bring that up, see what's going to move on the move today. Okay, some options that we talked about at the top. So that's the exact example I'm talking about is the second one down, that Apple C350. That's where that's where the strike price is. So right now that would be in the money because it moved up 5% today. So you would, at that point, you would either roll today or I would wait. They're not going to come in and take your shares. But if you're in a taxable account, playing with fire a little bit, right? Because they could. So that's why I don't want to dork around longer than a day or two to get those back out of the money, if you will. Okay, Northwest Bio's up. BOSQF's a psychedelic stock. Lowe's is up. Haven't seen Lowe's in a while. Sony's up. Sony's kind of a good news story. I do like it as a long-term investment. I have some, not a whole lot of it. There were some folks that bought ahead of the PlayStation 5 release, which was earlier this week. Again, there's two versions of PlayStation 5, kind of the new age download only version, and then the old school buy the disc to put in it kind of version. There's some more Apple calls there. You can see the strikes are at 360 and 350. Shopify and Facebook are in it together with the new Facebook shops. So that's I think they will stand to benefit from there. All right, looking over at the screen, both of those would almost hit their, well, it looks like it needs a little more. So kind of 2-hour trades now with where they are. I'd let that continue on to 3-hour. We've seen it back up a little bit, but it just keeps dropping. Okay, let's go over to the red side. So there's some DraftKings calls right there at the top at 40. So those are out of the money. LK, almost 6% down. Fantastic. I'm long that name. I'm a fan, not liking it today. Clickstream's a penny stock, so don't worry about that one. There's our DraftKings down 4% or so. Mineral is Brigham Minerals, local Austin thing, and then you start seeing some Airlines, Boeing, BTR, a small bank, LUV we talked about. All those are down in the 1.5% range, which is kind of to be expected. So, okay, you can close out of that. And bring up the SPY in the right-hand panel. Talk about how the overall market's doing. And go back to 1 minute. We can zoom in a little bit there. So seeing some selling on another screen. Let's see if it's in the red yet. Dow just went in the red. S&P is hanging out just barely in the green. From that chart, it looks like it's probably going to flip red for a little bit. So we'll see. We'll see how the market day goes. All right, over to the Q&A. You can leave these screens up for right now. Okay, do you see something like Airbnb undermining the hotel business related to vacation travel? I think there's a niche for it. So in other words, no, not a total undermining, if you will. So what I would say is there's going to be all the hotels that sit along Highway 10 and I-10, I-20, I-15 through I-95. The big major travel communications, if you will. All of that is still going to require your hotels that people are going to need for the major travel. Now, where I think their advantage is now go offline to your resort areas. That's where you've got an Airbnb that is now, people are trying to turn their Hampton getaway home and flip some profit on it, right? But so have some folks in it, but they may not necessarily want a continuous stream of folks in it. So I don't think it will be necessarily disruptive. I think they can both coexist. VRBO is another one. I'm not sure I've ever used Airbnb, but I have used VRBO, which is, again, more along the lines of what I'm talking about. So I guess Airbnb would be kind of right in between those two as far as the challenge of the hotels. But now I think there's room for both of them. All right, we can clear that out of there. Last thing I'll talk about today is lost in R and NCLH on the stop out. Is that are you talking your paper trade? Did you take it later? Or you might have taken it earlier to get stopped out on that. 3R on RCL and 1R on Oracle. Yeah, those are, hey, overall positive 3 for the day. I'll take that. I do have my TradeStation account set up. I have not funded it yet just because I was too lazy. So I will get the funds moved today. So we might be taking a look at a TradeStation screen if it makes sense. I need to get a little more fluent in it, and I also need to get a little bit better at multitasking to be able to either paper trade or take a real trade option with TradeStation there. Okay, let's talk lastly about the RevPAR. So let's switch over to the Investopedia screen. So if you haven't heard this term, And you can scroll up to where it's just the key takeaways are at the bottom, and that's good. So kind of that's where I start with these things is it's revenue per available room. So where I've heard this traditionally used, and where we kind of maybe want to talk about this morning, is traditionally it's used with hotels, and that makes perfect sense because that's their thing, is hotel rooms. That's like the big business, and sure, they make money off the restaurant and the bar and the $5 bottle of water at the desk. I mean, there's other revenue streams inside the hotel, but that's their core business, is that RevPAR. So that's how they measure that. So when you think of examples, if they have if it's $100 per room and they have 100 rooms, but their occupancy is 90%, then they're really only averaging 90 as far as their revenue per available room, right? So it takes into account how much they're charging with the different types of rooms, as well as their occupancy rate. So obviously, if the occupancy rate drops, that's going to have the biggest effect over it. But they do have some choice with the revenue. And if you know how these models work, they actually pre-sell out a chunk of rooms. Like if you picture one Holiday Inn Express, they will take 10 rooms per night and actually sell those rooms to Travelocity, and then Travelocity at a discount, right? So knowing that Travelocity is going to move. So they take a little bit less on that chunk of rooms, to know that they're going to have a higher occupancy rate out of those rooms. So there's all kinds of dealing. And then of course, that if you used to be able to show up late and get a little bit of a break, hotels have stopped doing that. Pretty much paying full rate, even if you show up that day. But that's how they travel. That's how they track their metrics over time. Now, where I came across it this morning, which is something I had not thought about, was when I was looking at Norwegian cruise lines. Cruise lines also follow the excuse me, the RevPAR model, because that's how they track it from when people book the entire trip. And then when they book the trip cost, that's where that is immediately allocated to that room that the person's in, and they figure how much revenue they're getting for that room. They do that on the macro level across the board, and that gives them their RevPAR for the entire ship. That's not something that I had necessarily thought about. And then, of course, that's one piece of the revenue. And then, of course, everything on the ship, like food's free. It's included in the RevPAR, but the alcohol's not, so you're paying for that. There's gambling generally on these ships. So they have other very high margin ways to make money, but their core was the RevPAR. So I thought that was interesting. There you see the example that I came across earlier as far as the $100 per night. 90% occupancy rate, and gives you the $90 RevPAR. So that's kind of all I have for today. Again, I'm going to refresh the overall market, click CNBC real quick, and that's where we will sign off. Holding on to the green, so we'll see. Again, Powell's in front of Chairman Powell of the Fed is in front of Congress again today, so that's generally a good news story. He tends to be saying all of the right things. And that's what I have. So we'll keep an eye on it. Thanks again for your participation. Again, if you want to point people towards the podcast because you think it's cool, please do so. And that'll, of course, help people get into the room. So with that, I'll sign off, and we'll see you guys again tomorrow. Bye.